The Federal Reserve's high-profile conference is in full swing with its head due to deliver a speech signaling changes in approach to monetary policy. Our Moon Hye-ryeon has the details on what to expect.
Central bankers from around the world are gathering at Jackson Hole, Wyoming to attend the Federal Reserve's annual conference, where Fed Chair Jerome Powell could shed some insight on potential rate cuts. Powell is due to make a speech on Friday morning local time, amid expectation that the Fed will cut its benchmark interest rate in September, after July's session minutes showed a vast majority of members favoring a cut. Although it is yet unclear how big the reduction will be next month, analysts say that policymakers have the signs needed to make this decision.
We've already seen that unemployment has risen almost a full percentage point off the lows. And I think that all the data is there for the Fed to start cutting.
U.S. unemployment rates have risen steadily, going from 3.7% in January 2023 to 4.3% in July this year, which is the highest seen in 3 years. This, along with the fact that inflation is cooling towards the Fed's target 2% rate, are some justifications for why a September rate cut could be due. The unemployment rate stoked fears of a recession in the world's biggest economy, but more encouraging data from retail sales last month provided reassurance that it remains resilient. As a result, investors are placing more weight on the possibility that the cut next month will be 25 basis points, as opposed to a big step of 50.
But I think 25 indicates that, okay, this is how things are going and we're going to be slow and steady. I think we probably get the 25, but I'm not throwing out the idea that 50 comes into play.
All eyes are on Powell's speech at Jackson Hole for a hint, including that of central banks around the world. The Fed's benchmark interest rate currently stands at 5.25 to 5.5%, riding a 23-year high after a series of aggressive hikes. South Korea stands at 3.5% following the Bank of Korea's monetary policy meeting on Thursday, keeping it unchanged for the 13th session in a row. While Seoul's inflation is cooling, growing household debt and high housing prices are holding the rate steady for the time being. However, with the Fed poised to make its cut in September and the two countries' benchmark interest rate gap at its biggest ever, the BOK could also make a move in its next session. Moon Hye-ryeon, Arirang News.